Hello everyone and welcome back to my channel, The Trading Mystic. If you would like to know more about it, then do take a look at the channel introduction video. In this video, I will cover a couple of trading strategies based on technical analysis. One for a stock trading in NSE, India, and the other one for a stock trading in NASDAQ, US. I will share the strategy details, take you through a couple of examples on charts, and also share the backtest results. So let's get started with the Indian stock. Our first strategy is for the stock Titan Company Limited, which is trading in the NSE. This is going to be a positional buy strategy, which means we will buy first, hold it for a few days, and then sell. For buy signals, we will track the Volatility Index, also known as India VIX, along with Stochastic Oscillator, wherein we will make use of 5-period %K line. Let's quickly understand how this strategy works. There are two conditions here. Condition 1 says that the previous day's VIX score has to be greater than its previous day's score and also the current score. Condition 2 says that %K line has to be less than its previous day's value. So when these two conditions are met, we go ahead and buy the stock. So the question now is when to buy and sell. We check the rules or conditions at market closing, preferably 5 to 10 minutes before the market ends, because that's when the volatility reduces significantly. Stock prices do not move much. The technical indicators do not fluctuate much. And we have a fair idea about the price and the value at which the stock as well as the indicators are going to close. So we buy as soon as we get a signal and we sell on day 4 again at market closing. Here is the India VIX chart on tradingview.com. At the top, you will see the open, high, low and closing scores of any trading day. Let's take the example of 2nd of June. And if you take a look at the top, the closing score was 17.21. So if you're trying to check these conditions 5 minutes prior to market closing, the VIX score should have been very close to 17.2. So we will assume it to be 17.2 in this example. Now, as per condition 1, the VIX score on the previous day, which is 1st of June, should be greater than the current VIX score as well as the VIX score on its previous day, which is 31st of May. So 1st of June, the closing score was 17.38. That is clearly greater than the current score, which is 17.2. And it is also greater than the previous score on 31st of May, which was 16.88. So as per this, condition 1 is met. We proceed to condition 2. In front of you is a chart of Titan Company. At the bottom, I have loaded the stochastic oscillator. The blue line here is the %K line, and its value can be seen here in blue. And as you can see, this is a 5-period %K line. So let's go back to 2nd of June and see if condition 2 is met. If you recollect, condition 2 says that the current value of %K line has to be less than its previous day's value. So on 2nd of June, %K line was at 57.94. Let's compare it with the previous day's closing value, which was at 65. So clearly the current value is less than its previous day's value. So condition 2 is also met. We go ahead and buy Titan company stocks. At the top, you will see the closing price on 2nd of June at 1585.70. So at market closing, we should be able to buy around that price. So if this is day 1, this is day 2, day 3, and day 4. We're going to sell the stock on day 4 at market closing around the price 1685. So we bought at 1585 and we sold at 1685. That is an approximate profit of 6%. I backtested this strategy for the period 2014 to 2021, and here are the results. The total buy signals or trades were 223. The win rate or the hit ratio stood at 62%. Maximum loss in a trade was 9.8, that's approximately 10%. The maximum profit in a trade was 13%, and the cumulative return was 695%. What you see in front of you is a return plot, which is a visual representation of the return generated by each trade. So if you take a look at the screen, all the red dots below the zero line are the trades that generated negative return, while the ones above in blue generated positive return. If you remember, the backtesting results showed us that there was a trade which gave us 13% profit. You can see it here between the period 2019 to 2020. Similarly, the same period, we saw the loss-making trade which gave us a negative return of 10%. Okay. We can analyze quite a few other things here. Between the period 2017 and 18, for instance, all of our loss-making trades were above the minus 5% line, which means all of our losses were under 5%, while the profits, many of them were upwards of 5%. So if you take a look at this, 1, 2, 3, 4, 5, there were 5 trades which generated more than 5% of positive return, right? Similarly, 2021 to 2022, we had quite a few profit-making trades here, 3 of them generating more than 5%. We had a handful of loss-making trades which were under 5%, with the exception of this here, which generated a negative return of more than 5%. Now let me explain the logic behind the calculation of cumulative return. In this example, I have assumed a balance of $100 that we will start off with in this trading strategy. Let's say that we get our buy signal here. So this becomes day 1. So as per the strategy, we're going to sell the stock on day 4. So in this trade, if we make a profit of 5%, when we sell, our balance will become $105, which is $100 that we invested, plus the $5 profit. Similarly, if it was a loss, then our balance would become $95. Now the point here is, when we get our next buy signal, we are going to reinvest the entire balance. Be it 105 or 95, the entire amount will be reinvested in the next buy trade. Now, as you can see, after I put my $100 in this first trade, I wouldn't be left with any money here, okay, until I sell. So, which means if I get a buy signal again on day 2 or day 3, I will simply ignore them. Okay, so that's the logic here. After a year, if my balance turns out to be $200, then I can say that my $100 has become $200. So that's a cumulative return of 100%. Let's go to the US markets. Our next strategy is for the stock Netflix, trading in NASDAQ. This is a positional buy strategy, which means we buy first and sell after a few days. For buy signals, we will make use of the volatility index, CBOE VIX to be specific, in addition to stochastic oscillator, wherein we will track the percentage K line, which is of 5 period, and average true range, also known as ATR, 14 period. So how does this strategy work? There are 3 conditions here. Condition number 1, the current VIX score has to be lower than its previous day's score. Condition number 2, percentage K line has to be less than its previous day's value. And condition 3 says that ATR value has to be less than its previous day's value. And once these 3 conditions are met, we go ahead and buy the stock. So the question now is when to buy and sell. We check the rules or conditions at market closing, preferably 5 to 10 minutes before the market ends, because that's when the volatility reduces significantly. Stock prices do not move much, the technical indicators do not fluctuate much, and we have a fair idea about the price and the value at which the stock as well as the indicators are going to close. So we buy as soon as we get a signal, and we sell on day 4 again at market closing. Here is the CBOE VIX chart on tradingview.com. At the top, you will see the open, high, low, and closing scores of any trading day. So let's check if condition 1 is met here. So we go to the 21st of September. And if you take a look at the top, the closing VIX score was 24.36, which means 5 minutes prior to market closing, VIX should have been around 24.3. So we need to check if this score is less than its previous day's score. So we go back a day to 20th of September, wherein VIX closed at 25.71. So yes, the current score, which is the score on 21st of September, is less than its previous score. So condition 1 is met. We now look for condition 2 and 3. Here is the chart of Netflix trading in NASDAQ. I have loaded the stochastic oscillator here. The blue line is the percentage K line. The value of percentage K line can be seen here in blue. And if you notice here, this is a 5 period percentage K line. At the bottom, the red line is the ATR, and value of ATR can be seen here in red. So let's go back to the 21st of September. Let's take a look at condition 2. Percentage K line closed at 37.73, which means at market closing it was around 37. We compare that with the previous day's value. So we go back a day, 20th of September. Percentage K line closed at 41.42. So clearly the present value, which is on 21st of September, is less than the previous value. So condition 2 is satisfied here. Let's take a look at ATR. ATR was around 13.2 on the 21st. Let's go back a day. On 20 September, ATR was at 13.25. So once again, here, the current ATR value is less than its previous value. So condition 3 is also met. We now go ahead and buy Netflix at market closing. So at the top, if you see, the closing price was 573. So we get to buy around that price. So if this is day 1, here is day 2, day 3, and day 4 is the 24th of September. We will sell Netflix on this day at market closing. The closing price was 592 approximately. So we sell at that price. We bought at 573. We are selling at 592. That's a profit of approximately 3%. Now let me share the backtest results of this trading strategy for the period 2014 to 2021. The total number of trades were 234 in Netflix. The win rate stood at 61%. The maximum loss in a trade was 9%. Maximum profit in a trade was 19%. And the cumulative return generated by this strategy stood at 574%. Let's quickly analyze this return plot. It's interesting to note that all of our losses were under 10%. So if you take a look at these red dots, they are above the minus 10% line. And in case of profits, there are about 7 trades that have generated profits upwards of 10%. And here's the one that generated 19% profit. Okay, this is what we saw a while ago. Let's analyze this year, 2019 to 2020. Again, all of our losses are under 5%. So are the profits, but then there are 2 trades that have generated more than 5% positive return. I hope you liked the video. The idea is to present these strategies to you. Go ahead and tweak it, try different combinations, and if you get a better result, feel free to share it in the comments. I will be back soon with another interesting one. And before I leave, please don't forget to click that subscribe button at the bottom. Thanks for your time, stay safe and take care. Here is from one friend to another. Please do not trade just because you have watched my video and understood the strategies. Perform your own research, due diligence. You can do backtesting using Excel sheets. If you know to code, go ahead and backtest and see the results. Observe the market. Do some paper trading on platforms like TradingView before taking actual risks.